Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, after 8 consecutive days with this trend line still remaining intact and viewed somewhere around the support region of 67, 30 to 40, is the market challenged the topside highs around July 2019 and was rejected after posting a 70.42 top. The market plummeted nearly 2% to a 68.97 low, and since then hasn't found enough momentum to get back towards those highs around 70 cents. From the rejection has now posted a bearish outside range day or an engulfing candle. An outside day is an important but simple chart pattern. Simply put, the bearish engulfing pattern is a 2-candle reversal pattern. The single candle at the moment, as you can see here, made a new high and posted a new low and closed relatively to the lows lower, that is, to the previous day. It is assessed that a close under 69.50 would give further increased pressure to the downside and calls out to the bears to take the move down towards the region of 68 cents or even down to where this trend line is. We haven't fully got the confirmation though from the indicators, so there is still a lot of work to do to get this signal confirmed. Nevertheless, it is a warning sign, so do be on your guard if you're trading for the long side and keep your risk management according to your stop losses and also to your take profits. A slight reversal in pattern overnight after the market at one stage viewed the US dollar index recovering, but then took a stage to the worse and plummeted to 96.10 to the index, and with the euro rebounding from the lows seen around 112.40. And now holds to a slightly possible upside bullish candle. But I would say that the divergence here, it does give somewhat an increased risk of a reversal from current highs. A move through 112.80 could see the next leg down to 112 figure 15 and reassess from there. The dollar yen remains negative since the rejection from 109.90, and I still hold the view now that we've taken out 107.90 to 107.05.15. A break beneath there would give further scope to the downside and bring in the target seen around 106 to 106.30.40. The pound, well, we've got a hanging man, and therefore from the challenge to the upside does give some concern that we could be seeing something changing in the trend. If you're not familiar with the hanging man, this pattern is popular amongst traders as it's considered a reliable tool for predicting changes in the trend direction. The hanging man pattern is a single candlestick formation and therefore could see further risk to the downside if we get a break of 126.10, and if so, would give further indication to the target somewhere around 122 to about 123. But overall, it is a significant candle to the bear case, so do keep an eye on that in case we get further confirmation from, as I said, the break of 126.10.15. Dollar CAD took another test at the 3-month lows around 133.58 and rebounded, and still presently holds to a potential rebound. I'm not a bear at these levels. I think the market could easily stage a recovery back to about 135. So therefore, I would rather sit out for the moment than any call to the downside. Well, after a very choppy roller coaster ride, gold has traded from 1,670 to 1,720 high overnight, and still at this stage remains persistent in taking the challenge if it can beyond 23. If we do see a break of 1,723, then this may give further an ignite bullish case to 30.32 reassess, because the top is still seen around 38 to 43. I am not a bull though. The market is very somewhat negative in terms of these indicators, with the MACD holding underneath the zero axis. So we could still see this roller coaster ride dropping back to the downside. And finishing up with the oil, well, the market took a bit of a test in the bear case and pulled back to a low of 37.22 before rebounding. I still say from the technical implications, we are still somewhat showing divergence to any recovery, so the bears should continue to pressure the move to the downside and look towards $36 a barrel as a potential target. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new day.